able to see view your screen.
Okay. So let me start with the. I'll first start with one of the questions that I got yesterday from a user, and I had actually promised him that I'll share his doubt or clarify his doubt to the best extent possible. It's regarding delta divergence. First, let me see. Okay. Uh, and this is, I've been asked this a number of times. If you remember, we had shared an article, and I think it is in Docathlon also, where I've actually tried to explain it as simply as I could what delta divergence is. So, what he generally wanted to know was how do we trade it? Okay. So, first, I'll briefly explain what delta divergence is, and then I will maybe try and explain it with an example so becomes clearer. Okay, sorry, with the chart, this one. Okay. Now, as you can read in the article as well, so divergence is nothing but something in I mean layman's term, something which should be and isn't. So if the price is moving up very aggressively, but the market orders, the delta is nothing but the market orders, the market buy or the sell orders. They're not moving in flow or in conjunction with the move upwards or downwards. So, for example, if the price has gone down like this, about you can see about 100 points, but the delta hasn't moved as much. For example, over here it has minus 100k. If it was say for example neutral, for example 0 or plus 10, so that would be a divergence. That is, the market has moved uh, lower about 100 points, but it should have also signified, because what moves the market, as we discussed the last time, was the market orders, which are the aggressive orders. The limit orders do not directly move the markets, so it should move in conjunction with the price. Here it has. So there are cases when it does not, and therein we say lies the delta, the divergence. Okay, so since it is related to delta, so we call it delta divergence. And similarly, there are a lot of divergences with respect to other indicators, for example, RSI and so on. So on GoCharting, you can see you can have these small highlighted areas where they show divergences taking place. Okay, so for example, what I was trying to say is, see the auction went from 335.90 to about 550 here, but the delta was in the range, in the positive range, 1 plus 1.3. So there is a divergence. So uh, what you see here is all such things happening simultaneously, and they keep happening throughout the day. Now, the doubt which I think the user had, and a lot of others, even I had that when we started, we tend to trade off everything that keeps coming. Now, firstly, as I did try and explain the last time, you cannot blindly trade order flow without any context. Okay, so let us. This is the day yesterday. Okay, so let us start and try and find an example of how it did pop up, and if we could actually trade that. Now, within the very first candle, 5 minute candle, you can see a delta of positive 7, and whereas the market went down very heavily. Now, remember, the first 5 minute candles is a lot of pending orders getting executed, and it's generally a huge number. The volume is huge, and you should not actually pay any attention to the delta coming out of the first candle. And you would also notice that the delta amongst various platforms will not be the same for the first 5 minute candle. It would somehow be similar, but the first 5 minutes is a lot of snapshot data coming through the exchange, and it's really haphazard. So uh, well, trading off the first 5 minutes is very difficult. You're actually trading blind unless until you have an exact plan, and I mean, you are too good of a scalper and you take a trade exactly at the open. The other part is, you also have to realize that when the market opens, there are a lot of traders who are trapped. I mean, here it opens right there, but there are conditions when the market open gaps up or or it opens gap down, and there are traders who are trapped. So they generally are the first ones to get out of the positions, and they do not get out generally using limit orders. They just punch in their orders, and they're the market orders. So the first few uh, candles, that is actually the first 5 minutes and the first 10 minutes are the orders that are firstly people trying to get out as fast as they can if the water has come up to their neck. The second ones are the professional ones who have a clear idea of how much capital or what is their intent for the day. Okay, they might come in here, they might come in later, they might see what is the general flow of the retail, and they might come in later. So let's start with this candle. So this we just leave aside, and we see there's a huge this is a huge candle for about 200 points if I'm not wrong. So obviously, yes, exactly 200. You cannot trade this. Okay. So the next one, what you do is, this is a basic chart. What I have is these numbers are I basically divided them by 25 to have the contract size or the contracts being displayed instead of the total volume. You can have total volume as well. So it is just reducing the number size so that it is actually visually more convenient.
Okay. So the left side is your sell and the right side is your buy.
Yes, this is the basic. Yeah, this is the basic order flow. I have done nothing with it. The buy and sell, if you want to see, I have done nothing extra. It is just the similar ones. I've just put in the imbalance percentage as 1,000. Okay, and we discussed this the last time. I'll just go through. At this point, I am not actually paying a lot of attention as soon as the market opens to this part. Okay, so trading this and delta divergence as soon as the market opens should not be your aim. Your aim as soon as you come in the first 5 minutes is to get a general feel and the flow, what is happening. Okay, it is right now, you should be absolutely neutral. Know that the market has opened gap up, it will fill the gap. Nothing like it has opened gap down, it will go down. There should be absolutely no bias in your listing. You're watching, you have to understand you're watching a chart which shows you the orders flowing in. So you have to just take as neutral a stance as you possibly can. I know it is very difficult in the beginning, and this is your primary aim. Okay, so as soon as the first 5 minute candle ends, it is from the close, we can see it has come down about 120 points after attempting to go down even further. Okay, now here, this is the candle where the first part starts. Okay, so from here onwards, you will probably see a mix of the orders getting covered up and some fresh positions also being taken. Okay, so from this candle onwards, you need to see what is happening. So you see there is the POC for this particular huge candle was somewhere here. Okay, there was a lot of orders traded at this approximate level. What happens next is the market goes down, and there is, I mean, this delta is huge for Bank Nifty. So not huge, but it's on the larger side on the second candle. So you get an idea that, okay, this there is some negative bias still there, but you still would like to wait for another 5 minutes or 10 minutes to gauge what is happening. And when this one happens, you see another minus 8.8, and it is going to the place where this large order, which of course was someone's order which got triggered if he was trying to get out. So if the market had some sort of strength in it, or did not believe that this is too free, this is a free flow and should not go there, after this point, the market should not be attempting to go down further. Okay, so how do you know this? Let's start with the volume profile, basic volume profile chart. Okay, so this is the first 5 minute candle, this is the second one. Okay, now this is the low. So what do you expect? And this also happens to be a support. Now the best way to trade such things, supports and the previous low, is to have a general idea of what the people will try and do here. What do you think will people try and do here? They firstly, the general idea about of the retail would be that there would be a bounce. Okay, so uh, the second thing is this part somewhere here. If we see, which is exactly 680. Okay, so this is the part where I see, okay, there is a support, people will try and cover up, and if it does not stay here, okay, so there is a likelihood this negative delta is likely to persist. So over here, when the candle, again, this happens really fast. So when you see, as soon as it opens, it's not able to sustain above this. Okay, these three areas, I'll just mark it. Okay, so you see a lot of volume here. You see a lot of volume. This is one order which had come in late. Okay, so and you can mark this as well, where the last one triggered before it went up. Okay, so if you see in the third 5 minute candle, it's not sustaining. And if you are a scalper, and if you have some experience in the market, what you can simply do is place a market sell order with a stop loss. Again, it should always be a cover order. Never ever take the risk of I will cover it when it goes up. It is too fast, and it will just take you out in no time. And when you are somewhere here, it goes and comes down, and it's not able to come here. Of course, there is a risk, so you put a stop here. Okay, this one. Okay, because after this, you can be dead assured that if it comes back here, these guys who had shorted here, a lot of retail would have, will cover very fast, and in no time it will come here. Okay, at least till this point, 800 in no time. Okay, a lot of guys will just move out as fast as these initial high volume bars, that there's a lot of participation happening. So you can be well assured that they'll all get taken out. Secondly, if it comes back here, you know that the stronger hands are not ready for the market to go down. So you were wrong. You need to get out. Okay, and in every, we just playing on odds and probability here. So when you take a trade here, simply how many points are these? This is the stop is how much? About 50-60 points. Okay, in options, if you are trading a 0.3 0.5 delta, it is hardly 15 points. Okay, and the target, of course, should be up at least 1.5, because at this point, as we know with Bank Nifty, if it falls, it will just go, I mean, 150 points down from here. Okay, and then what do we see? It does fall, and you keep looking at the delta also. See, this is huge. Now, this is not retail. Okay, this is certainly not retail now, 100K delta. And now when this goes down, either where is the place you cover is again the next question that keeps coming up. You look at the chart basic, we've gone down from here. This is one point where you could cover, where you had seen a lot of orders pumped in the day before. S2, if you're not comfortable, again, even I was not. So this is some place where you try to cover. That is one part, because you're scalping. Or the second part is you're looking for a good move down, but again, you have to realize you're doing something against the trend. It is an uptrend market. Yes, this is going down, and it's most probably a liquidation break and not someone really selling for the long term. Okay, and the next time when it comes here, so you've got approximately more than 100 points here. Okay, so where should you trail your stop loss? Well, what I had done was I had simply come here and put my stop loss. It got hit, just too bad. I got what I needed. Why here? Because again, I see a huge order here, and with Bank Nifty these days, you do not want to risk it too fast, because yes, there are days where it goes down for about half an hour, settles there, and comes up. After that, it happens quite frequently, and there are also days when it goes down in 15 minutes, in another 30 minutes it's up. So when this is all happening quite fast, it's very difficult to hold your nerve. But yes, if you look at what happened afterwards, I mean, you could have got a lot more. But again, the trouble with this is if it stopped here, if you see where does it stop? It stopped at another very big order where you see an imbalance happening, and this is the area. This is another area. So where does it stop? It stops here, and it's not. I mean, this is another big volume area. So it stops here and is not able to go through. So this is probably another place where there would be continuation. The next trade which you could, I mean, if you're aggressive here, you could trade here, but I would have preferred to trade somewhere here after this got broken. And but at this point, if you trade at this point, as soon as it goes below this with some imbalance, the only trouble is that let's come back here. What was that level? 3,500. Now you should always remember that 3,500 is firstly a round number, and the only trouble is it's almost there at about the support, second support. And if you go back a little further, you would see there is a high volume node here. So there are a lot of things. The next target, of course, is somewhere here. It actually does go up till there, but you have to look at it with respect to risk and reward. So how sure are you? If you were still in the trade and you've not come out, of course, it's absolutely not a bad trade to continue. But if you're taking a fresh trade, you need to have a look. And again, you can, of course, scalp because it did turn out. The second thing that goes in favor of shorting, again, is some big player is obviously liquidating his position. Now, why do I think he's liquidating and not selling? We'll talk about it a little later. He's liquidating. So it is highly likely that there are two ways he can liquidate. One is he liquidates in waves. That is, he liquidates here, lets the market come back again so that the price does not go too much against him. Then again gives them good orders, goes back down, then comes back a little up. Then as soon as it comes back, he again goes down. Or the other way is like this, right at the open, waits for some time and just boom, 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 and it keeps going down. But you never know what is actually happening. Okay, so this could have very, very well come up to, say, somewhere close to this point. Okay, or this point, there is someone here as well, and then again gone down. So if it would have come down here and shown a sign of weakness and gone down again, I knew it would have gone to S2 and I would have got a very, very good risk reward ratio with a good comfort level. I certainly wasn't comfortable here because there is a lot, as I said the last time, there is a lot that can go wrong here. It didn't, that's a different issue, but it goes down here. And as you notice, see again, so this is a confirmation that someone is liquidating. This is not retail. Okay, these huge delta is not retail. And then the second point where we said where we could find someone is, let me come back, is this part where we looked at this one. So someone does come here, okay, exactly somewhere here, and these guys would have been the ones who took the market up at that point in time, or anybody else looking at those levels. So, and they come up. So the other part is a buy trade was also possible somewhere here, but after 10, 15, the momentum is not that fast. Okay, and you also have to notice that by this point, okay, the delta, the cumulative delta, or is huge. So and there is a lot of time left in the day. So the probability of it covering everything that it retraced at this point is very low. And after 10, 15, 10, 30, there is generally a consolidation period. So if you see it's about minus 300K, the delta at this point. Okay, so there are two things that can happen at this point. Is, like I said, if the guys who are liquidating have still some more to liquidate, but remember, these are not fresh positions most probably. Yes, some retail would be joining. So above minus 300 or minus 350 cumulative delta in an uptrend, I would rather, I mean, 8 out of 10 times, I would rather believe this is going to wait for some time before another down move takes place. Okay, so this is not based on how many points it has fallen. It is based on how much someone has liquidated in uptrend. Okay, so the basic trend is still hugely up. I mean, there is no doubt. So going against it is really risky. Now to come to the point where you take a buy trade, again, you could trade here, but be rest assured there'll not be fast moves. This one is, but after 10, 10, 15, it will take consolidated, approach. And then sometime later at about 1300, 1315, you will get a good up move. And it's better to trade there with higher probabilities because this will keep happening. This is there to trap everybody.
So Rafaji, so this is how we kind of interpret a combination of volume profile and imbalance or order flow chart. How does something like market profile come into the picture here?
Okay. So this is actually the tool that I use to form my opinion or bias before I move into volume profile. Volume profile is instantaneous access to what is happening. This is what I expect the odds are going to be. So while I'm taking, for example, there are two types of positions you can take. Like I said, an immediate scalp based on the order flow and the volume profile. And then there are positions that you would love to take somewhere here in an options, for example, bull spread. It could be a bull put spread or a call bull spread, or whatever. So this is again off the topic, but something which you can expect this with a stop loss somewhere below. Now, when I'm coming into the day, okay, this is what I'm seeing. Okay, this is 17, and what I have been seeing is the market is in a range. Okay, this Bank Nifty has tried to move up the range and failed the previous day. I mean, for the past 1, 2, 3, 4, 5, 6, and this 7. This was the time when it tried to move up and it failed. And it failed at an absolute whole number, that is 31,000, which generally does happen the first time something like this happens. Now, it doesn't mean I think the up move is over. This is not a good, good structure for any good retracement down. So I know the up move is not done. Okay, this structure is again quite poor. If you look, this is a balanced structure with this poor formation which got repaired the next day. So what I'm looking at is something of where does the market close here? Okay, it closes here. Okay, so this structure, all this part needs repairing. Okay, and I also believe that the previous day, these are single prints. This is what held the market. So if this breaks, okay, and if this POC it goes below that, so what I can expect a range within this whole market profile. Let us not show this. When the market opens somewhere here, what I would expect is something of this thought. That is my first this thing, because it is opened within the market profile value area and even the volume profile value area. And I do not consider this as a strong buying tail, because it has moved into this area, previous area, and it should not have if the market was that strong. And secondly, it has moved into the balance area. This an attempt to go out of balance and move inside the balance. So two things can happen. Either this goes to the other side of the balance, which we'll see whether it happens or not, or it gets rejected from here. But as soon as this part is not, visited, and it takes a rejection, I could have taken a long. But as soon as this part is broken and the market looks weak, I know this will all get taken out till this point at least. Okay, so this is why.
Rafaji, if I'm a trader and I'm trying to find 2 or 3 most important things that I should consider for tomorrow, right, when the market opens, right? What are those 2-3 things, that I should have in the back of my mind?
Okay, so let's go to this is what happened. So if I just explain what and how it played out. So now when the market opened the next day, look where it tests and just repels. from the POC. Okay, so this is an indication that it will likely go firstly to this part, and secondly to the lower end of the last day's profile, but it just whips past. So this is another confirmation that I'm going to get a good short trade here. So, and I am ready before the day opens that if it gets rejected here, the
Hmm.
open becomes really important. And if it is opening within the profile, so the odds are it will stay within this. Okay. And when it rejects here, I know this is the first target that I should be aiming at 650. So if you see, when it goes down and gets the target that I hope for, I am a little uh, wary because the initial balance has also become a lot wider. Okay. And when I come into the day, so what are my probable targets after this? One, this 599, and the other one is this. So when the first time when we discussed on the order flow, this is the player where we somewhere here when I talked about covering my position, because this is the POC which was not tested, and it is there is a high likelihood that it might bounce out of here, and we got the same confluence in the volume profile as well as the uh, I mean the volume profile of the last few days. Okay, now if you ask me what I look for example for tomorrow in a volume profile chart, like in a market profile chart, so what I'm expecting tomorrow is uh, the market has closed somewhere here. Okay, now this is a poor structure over here. So in all probabilities, depending on where the market opens, if it is opening here somewhere, we can certainly expect it to move somewhere till here. Okay, repair the structure. And the other part, as I said, I would be wary at this point that it might bounce if the market is still strong, go up here, or it could simply go down here, up here, if the market that is opens here. If it opens somewhere here, okay, I would be very, very wary of taking a short. Okay, the place where I would likely take a short is if it is goes down here, comes back here, and then shows some sign of weakness, I would try and go short here. Okay, but if it opens right here, I am initially not interested in the short. Okay, see. So these are the potential targets, but again, it is too, I mean, too risky. Again, you see on the volume profile, of course, it does not mean I will not take. Now, some would call it this, all these three as weak lows because they're all in the same region. So at this point in time, there is no clear signal. It is, these are weak lows. That means these can also be tested. Even this is a very poor structure. Okay, this. So
Let me share a few levels for next week to watch out for, essentially from profiling point of view, and then I will cover just a quick order flow technique as well, which can be used again in day-to-day market conditions for people. Okay, if it's okay, I'll just share one.
sure.
Yeah.
I'll stop sharing my.
Okay.
So
Yeah.
as Rafaji just okay.
Yeah. Now go ahead. Go ahead.
Okay.
Go.
No, as I Rafaji mentioned that so above 30850, we have a upside for 31,000 also because that is a poor high which is visible on the micro profile chart. Am I
Yep,
right?
yep.
Okay.
Just a
Thank
moment.
Let me know if you can see the charts.
you. Yes, we can.
Okay, perfect. So I'll quickly cover Nifty first and then Bank Nifty. So, okay. So first of all, if you see the structures, okay. So Bank Nifty, this is like, this week has been these 5 days roughly, right? So, relatively definitely weaker than compared to Nifty, because after these 2 days, Nifty sort of had broken above and held these levels. Okay. For Bank Nifty, if you see, it's been rotational within this range as such. Okay. So, um, as such, there would be not very clear strong references for Bank Nifty compared to Nifty. So, but when Nifty moves, you could take this as a clue and take it forward. Okay, for Nifty, see upside, there are no levels to refer to. You so essentially do what you do is typically refer to extensions essentially and pullbacks. But if you want to mark two levels in your chart for Nifty, just mark these levels 670, 75, and 615, 620 areas. Okay, these two levels, depending on where it trades next week. look for a pullback from these two levels, or if it's weaker based on short-term charts, you could look for a breakdown of these levels for a move back to 570, 580 areas for Nifty. Okay. And for Bank Nifty, if this was a level in reference and level in play for, I think, Friday itself, the 600, 650, 680 zones, 30,600, 650, 680 zones. Watch out for this level, this marker that I have. Watch out for a hold above or a hold below for a bullish or a bearish bias essentially in the markets for this. So if it tends to hold below, look for a move down, up to levels in play could be this 3300, 200 areas. And if it holds above and nifty is stronger, you would like to want to trade a pullback of these areas, okay, to test back the highs of the last week. Okay. And any questions around this?
So if the marker, which is red horizontal
Yeah.
bar,
Yeah.
would you suppose you should be trading around 306 600, 306
Correct. Correct.
So in case we will consider cumulative delta or delta divergence if it's trading on this area, and if consider, how you consider?
Okay, so if it's trading around, let's say 630, number one, first is where it has opened from where it is. If it's, let's say, opened lower and holding above this, then of course you try to have a bullish bias if it starts holding above this level. Okay. And if it's holds, if it is opened above, broken below and holding below this, you look for a bearish bias downside. Okay. So generally, if it opens where it has closed, your first idea is to see for a failed breakdown below this level. If it fails to break below, and then you go back to, let me actually take you to an order flow chart for that exact level for this day. Okay. You see these levels, where were the large clusters around there? If there was a, I think 38k odd traded in Bank Nifty somewhere around 600 odd area. So essentially what you try to do is, if it opens up, delta is negative and price is not going down, you look for a failed breakdown below 600 areas and see if it is not able to break below, you look for a pullback that from that region. On the contrary, if there were larger volumes which got traded, and if you see that prices are holding below those levels, you look for a pullback, essentially break into that level and to test lower. First target would be, of course, as you said, the low of the previous day, and then lower from there. I think there were, if somebody is on Twitter, I think I actually mentioned that 680, 650, 600 was a reference for Friday itself, and if you see, there was a pullback from this region itself, and the reason for that is, again, I'll actually cover this. Okay, let me do that. When that first opening candle fell, okay, right, if you see, there was hardly any volume in this region. I mean, there was hardly any volume in terms of accumulation, in terms of trading both sides, right, on this region. So this is a sort of a low volume area which would mark and hold for prices to reverse through. It happened in the first instance, right? And if you see, and then when it fell through from here itself, I think the same area that fell through, and then where would you try to get a feel that, okay, now prices actually can go the other way around. Okay, next is, you'd have traded a short, there is a pullback again, but now you're not confident whether now prices will hold or it will go the other way around. Okay, so what you do is you look for regions where prices have essentially held through, or there was no volume again. So there's the other way of looking at, where there was no volume and prices actually sort of blasted through those levels. If you see this bars, this zone, nothing here, right? In this bar, nothing here, right? Now this one broke above. Next levels we started getting volume here, and what is a good confluence, you have holding it above the view up levels as well. So you look for a long side bias from here. Okay.
Okay.
Yeah.
Yeah.
So look for, I think look for, I'll also quickly cover your technique, which he spoke about a technique called delta divergence. I'll cover another technique which is called delta reversal. You might want to, let me quickly come to a chart where we actually have that pattern. Just a second, everybody. A second, I saw. Okay.
These are the imbalance bars, right?
These are the imbalance areas, right? These are the imbalance areas. Okay. So what we look for is essentially in, I'm just looking for a good reference for you. Just we had one where we could just see that. Da, 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 da. Just a second. So I'll just, as a concept, I'll quickly tell you what delta reversal is. If you have a downside candle with a pretty decent delta, or let's say any delta essentially, and it hits somewhere around the low or mid low of a day where you're looking for target, and then you have a reverse candle which has an equivalent or more delta. If more, it is better, and sort of engulfs that candle itself. Okay, you have a very good delta, sort of a reversal or a delta confirmation trade there. What you could do is use that candle's low for a long side bias. I'm looking for a, we had a very, so what you look for is, the delta for any candle, right? So if you have one candle with a sort of a low delta hitting, and then the other one, which is a sort of reverse or equivalently high delta with a good engulfing candle, you use that, the previous candle's low as a stop loss, and look for a long side bias, depending on other areas, or other levels matching up essentially. Okay. And so mark these levels if you want for Nifty and Bank Nifty for the next week. And do you have any folks doing cryptos here? We'll cover a quick reference for Bitcoin as well.
Yeah, I think
Okay.
we are recording the session, so there will be people who will be
Okay,
interested
great,
in.
great. So this is the, profile chart on Bitcoin. So one thing to observe is, compared to traditional market profile or volume profile that you use for, let's say, ES for, or anything else for a lower time, Nifty, Bank Nifty for a lower time frame. This is a market which gets traded 24/7. Okay, so your observations, your time frames have to be a bit adjusted in terms of patterns for a higher time frame. So a good reference is a 2 hour or a 4 hour reference for these sort of markets, essentially the crypto markets. Okay, and now if you think, if you look at these levels, I'll cover these levels both through profile and order flow. What are the good references to look for? Number one is this volume profile zone that you have. So your first take is to see that we hold this, if you're looking to go long in this market, first take is to see if you hold these levels. Else, be patient, wait for it to pull back to this 19,000, 19,100 areas, 500 areas, and look for a buy side pullback from these markets, for these markets, because there's a lot of volume accumulation here, past 3-4 days before this breakout happened. So it's very likely it will pull back to either 2750 if it's nominally weaker, or it will pull back to 19500 areas for a pullback play on the long side. And I'd also let me also cover is where you would have sort of observed it and played it with using the order flow compared to, let's say, your essentially how to have confirmed a breakout with an order flow. Let's say if you want to confirm a breakout, and you want to see whether that there has been multiple break attempts before that, how do I confirm that this break of attempt is likely to hold? So we'll just cover a sequence, and this could be used for any markets, by the way, so it's not necessarily that it's Bitcoin or anything. So let's just observe this. I'll tell you. So this is the region sort of that broke through, right? Okay, first of all, if you see, can you see the charts clearly? Okay. Okay, so if you see, on the top, whenever they tried to pull back, there was a lot of volume interaction happening. So 28, 32, 26 million, 29, 30 million getting traded around this range, right? Okay, so now what happened? On number one, in terms of a failure of sort of breaking through, there was this 53 million, 47 million got traded. Okay, and then these are pretty good volumes that got traded, but prices failed to hold through. That is number one confirmation that low side may not hold, but then you might argue that okay, there is an upside play here as well, right? Great. Then if you observe this, okay, this candle was the first candle where sort of a it had a broke through, and it broke through and it held with good imbalance, good delta on the higher side essentially. Okay, so there was a first instance of buyers actually coming in above these levels. So till this point, it was sellers coming in, pushing it down, or passive sell orders, whatever might be there in the market. Okay, first instance where actually buyers have been able to take this through. Okay, and where is the reference? Where was this sort of a buy side play here? If you see this volume zone, this imbalance, this becomes your reference as to hold through in terms of market conditions. Okay, and now I want 670, 650 region to hold through for me to trade a pullback play. Once this one, the next candle failed to break through, you probably use this as an entry point with minor stops just below around 600, 500 areas, right? That's all. And then there was this breakout play there. Same for ETH USD if you see. Okay, so we had this reference 608 odd areas. Okay, and just a second. Okay, so if you see in any pullbacks to 590, 600, you had orders getting traded. Now in this case, it was a different pattern where for the first time, pullback to 600, you had a strong imbalance at 11 million, which is much higher than what has got traded in the past. So this was a great confirmation in terms of a buy side play. Then again, you had these imbalances, so you would expect these imbalance levels to hold through for the pullback continuation. So your entry ideally would have been around this imbalance level. You may, liquidity or anything else, you might, it may not exactly pull back always. So you would essentially look for a pullback to these levels and hold of these levels and for a long side play. So your now reference, as I said, for BTC is 19,000. You wait for 2750, that is one reference. Okay, if it's mildly bullish, and then 19,500 is another reference where you would want to wait for patiently for it to come back for a long side play. This market has been strong over the last few months. So there's been a lot of talk around essentially more asset allocations and more institutional players coming in. So I know until these levels holds, we will look for a buy side bias. I think we would open it for a few questions. Yeah.
Yeah, sure. Yeah, we will now open it up. Thank you, Rafaji. Thank you, Sanu, for this great session. We would like to open this session up for Q&A. So anyone has any questions, you can either type it on the chat on our right side, or you can call it out. So again, your questions can be very basic. Your questions can be very advanced. We have people who have different levels of expertise in this forum right now. So we would like to kind of address each and every question. So
yeah, hi, this is Bhavin. Can you hear me?
Yes, Bhavin, we can hear you.
So I have a quick question on the market profile setting that Rafaji did. So when I put the market profile and the volume profile, basically I'm looking at only the session volumes, and I want it to be basically aligned with the market profile. But somehow I'm not able to get that, and I'm just getting the main volume. So I was just using the tick-based profiles for both. But is it different in the actual market profile, or how is it doing the setting?
Okay, James.
Yeah, Rafaji, please, you may share your screen.
If there is a video also that is an extensive one, if you can go and watch, that is also there, but I'll just share the settings. So first is the width. Okay, this is nothing but the width. If you are choosing volume profile as well as market profile, like over here. Okay,
Rafaji, do you want to share your screen first?
Oh, okay, sorry, I thought I was already doing that. Okay, can you see it?
Yes, we can.
Yeah.
Okay, so okay, these are the settings. So as I said, there is a video also. It's quite extensive. You can go and check it out. And nevertheless, so this is tick market profile, and what you get essentially in the market profile is volume profile as well. So we need not add another volume profile indicator to it. You'll see that there is an option here where you can choose what you want. You can choose the composite, which will say show the visible, as you can see over here, the volume profile for the visible area. Okay, I do not prefer it that much because I can see everything in this market profile chart. The second setting that is which generally confuses the people is this one, the width. Now this is the width for the market profile. So if 50%, that means if this is the area designated for the market profile and volume profile, 50% of it would be for market profile and the remaining would be for volume profile. So if I simply do 100 here, I wouldn't be able to see volume profile.
Okay.
If I do 50 here, I can see both of them. If I want more of volume profile, I can do this. Okay, so you can just, I have kept 50, so I get a good view. If you do 70, what you do not get is a good view of the volumes inside. The only problem is, that's not a problem, it's a setting with all the softwares and everybody, that when you get a market profile along with the volume profile, you cannot change the tick separately for the market profile and the volume profile within the market profile like this. So it has to be in conjunction with the market profile tick setting over here. Okay, so I keep it 50, and if you want to see what the order flow settings I have used is, it's 11 points for Bank Nifty constitutes one TPO. Okay, now again, it's to each his own. It mostly, like I discussed the last time, depends on the volatility, because 10 points is these days just one tick, two tick is 10 points. Okay, so it just moves. If you would have noticed these days, so that is why I've kept it like that. Otherwise, there are instruments like in Nifty, I would have it a lot lesser. Let's see what I've kept in Nifty. This is the same chart. Okay, let's see what I've kept. It's for 3.75 points. Okay, so you can see it depends on the volatility, and you will have to keep changing and adjusting it. And for example, this is for Nifty, and you can see the chart. And for Bank Nifty, I've kept it a lot higher because of the volatility. Even then, you see the charts are so wide. So it mostly is due to volatility, and you can keep changing, or you can enable the auto mode. Is there any other doubt in this which you want?
Thanks, Rafaji. So I think my question, so maybe where maybe something has gone wrong in my setting is, maybe when I put the market profile tick base, what I see is the only option is the volume profile POC. It's only when I separately choose the volume profile, I'll get an option of, like showing the session volume or the main volume. But in my,
I think you have opened the split option. That's why you're not able to see the split option should be closed. Then you can see volume as well as market profile.
Did that answer your question?
No, sorry, I got lost.
Previously, I have that same issue. I think some option which we need to disable, then we can see the volume profile as well as market profile, and that could be a split option. When you disable the split option, then you can see.
Okay, I'll just this is the okay.
Yeah.
When you do this, if you do this, you will not get volume profile. Okay, this I forgot to tell you. So
I have one question. When you consider market profile as a context point of view, will you prefer the market profile point of control or volume profile point of control?
I would, again, there are a lot of views on this. I generally take into consideration both, because volume has its own significance and time has its own significance. The person whom I learned it from was James Dalton. Now, he does not believe in volume POC. There is another guy in the US who I used to follow, even follow now. He is also a disciple of James Dalton. He follows only volume POC. So it is actually a total, but I do have both in mind. Why? Because generally they'll be equal, but for the last day, like the last one, your question is quite valid for the last trade day that we had for Bank Nifty. You see where the volume profile is, the POC, and you see where the market profile POC is. So what I say, like you got two views. What Sanu said is 650 to 680, if I remember. What I feel is that this is 680 is that POC that we spoke about, that but if it opens this is the point where it closed. If it opens here, I see this point getting tested, and this is not the POC. When you see market profile, you have to see that there were 4. This is quite wide. Okay, this is, for example, this whole region is quite wide. Okay, although the volume was also high, it might help you in the volume profile higher volume node. So you see 1, 2, 3, 4, 5, 6, about 8 TPOs. Okay, 8 to 9 TPOs. So I certainly do feel if we open here, we will visit this place. Okay, and this is how I use it.
Delta bars is always dependent on volumes, right?
Yes, everything depends on volume. This is the only tool. I don't know about GAN and other things. I just this thing, but for me, this is the only tool that gets time into context. Okay, there is nothing else that will get the time into play. So over here, this is the highest volume, but you see there are only 4 TPOs. It is half the size of this TPO size. So on days like this, I would certainly not leave this area out of my context when I move into the next day. Okay, so to answer your question, I've taken both into account. So if we are on Monday, if we are loitering around here for the first few hours, it's no surprise to me. Okay, this structure is being repaired in the first few hours, and then any break above this, I would just simply go. Or if a break and fail, I will go for this point. Okay, this is what volume profile. This is the market profile context. So you can trade what you're comfortable with.
What one more term I heard, but I didn't found what is that? Is WPOC. What is the WPOC?
WPOC. Would you? I don't know what that.
I didn't find any definition, or I didn't find. But sometimes I feel some of the charts which is referred by so many traders, they are referring the WPOC. What is the WPOC?
They would be saying VPOC.
It's VPOC. It's a virgin point of control.
Yeah. It's VPOC. That is what. Again, there are 2 points to it. People who use market profile and volume profile, they use VPOC to call it volume point of control. People who use market profile, they use VPOC to call it virgin point of control. Even volume profile guys call it either virgin point of control, or some people call it the naked point of control. Okay. So
Yes,
trading you will see something like naked point of control, where you say the naked is something that has not been visited before, the likelihood of it being visited. So if, for example, this was a naked or a virgin point of control for market profile till this day happened. So once it visited, this got taken out, and we don't hold it as a reference for future.
Okay.
Is there any way where we can hide the profile structure and keep only the value areas?
No, this I think I have also requested.
Yes, we will take this up in our upcoming releases, guys.
It's a very good feature.
The profile structure will be hindering the view, right? We may require only the value area. Value area could be in the form of a line also. It will be.
Even I have requested.
But there is one of the questions.
There's another way you can do it actually. I have just a minute if I can get it in the tick. No. Oh, how do? I know how to do it. This is one way to do it. I have done this, so you can do this for the timing.
Otherwise, we may have to make the profile structure transparent.
See, so this happens, and then you can cross. Yeah, no, just a minute. I'll just show you what I do. See, something like this. Okay. In the tick, the last session is coming, but in the normal this last session will also not come. This is what I generally do. Okay, so you can have this value here. The only problem is that the first candle would not be visible. See, I'll show you.
How did you do that?
It's coming on. Just a minute. It's not. I'll just do it in a normal market profile. It is possible on a normal market profile. Just let me do. I'll just tell you how I did it. I used to do this. Just a minute. Okay. You turn this into 0. Okay. You turn off the volume profile. And okay, now I think they changed the setting that this BC is also visible, but value area. Okay, this is the place you keep on holding. Okay, and you can get the initial balance as well. So this is what I have done. But yeah, when you expand it, you don't see it.
One of the things you can do, Rafaji, is actually place the market profile behind the candles. So if you
this is how you can do it. Basically, by disabling the width percentage to 0, and then letting everything remain the same. And what I have also requested is that instead of having a market profile transparent, yes, that is a good option. The two things that are really helpful from the market profile or the volume profile chart are the initial balance range and the value area. So if there could be an option to just something like this, if you see the initial balance range and the volume, the value area is available. Okay, and this you can just see. So you're getting somewhat of what you want. Okay, but what I have simply done is gone here and turned this to 0. Okay, and turned off whatever I need or on. So this is one way you can do it. The only issue I was finding with it was the first candle had something like this, a background in it. Otherwise, everything else was fine. And the other problem is this keeps happening. Now this is okay. This is 30-minute chart is fine. So if it turns out of your view, it will go out. You see. So these are 30-minute chart, but it certainly wouldn't help if you have it on a 5-minute chart. Yes, you can have it. The
See,
problem is the value area vanishes as soon as you move it out like this.
another word of caution around this is if it's a sort of a balanced day, it makes sense. But sometimes within that profile value area itself, you have high volume and low volume areas. So, you lose context of that.
Yeah, so it would be better to have a line instead. Uh, I mean, different.
I think the border alone essentially
Yeah,
without a fill. Yeah.
that I can share with admin how we can try it out. So let us go back.
You have that area border, right? Essentially, you're saying.
Yeah, so one line here, and initial balance. That's it. And if I mean, if you need the POC also, POC is not required. Only the initial balance, and I mean that is required. That is all. Okay.
Okay, yeah, we will look into this. Look into the possibilities, guys, in our upcoming releases.
I have a query.
Yes, please.
See, with this is with respect to initial balance on market profile. I mean, there are two things. First is getting this data visible in terms of the number of points that are covering the initial balance for the day, data on that, and basically determining how much the market would trend or stay inside the initial balance for the day, because in market profile, initial balance has a very important role. If we can probably understand if the average range of the market for the last 5 or 6 days has been, say, somewhere around 100 points, and if the initial balance for the day starts with some 30 or 40 points, so you can expect the market to move another 40 or 60 points up or down, depending upon how much the initial balance is. So basically
Okay.
something on that line which tells you of the kind of move you can expect in the next remaining session, and determining that basically through the initial balance, because I feel that is a very important and a critical uh, piece of information, how the market has moved in the first 15 minutes or 30 minutes, and where it has opened in the value area, outside the value area, with that respect, if somebody can.
Okay. This I think Siddharth I've already shared with this. What this has been going on. If you remember the initial balance range percentage that we discussed, 50, 150, 200.
Okay.
No, I am talking to admin actually.
Okay, sorry.
I know what you're talking about. It is called the initial balance range percentage extension. For example, what you have here is this. So this is the initial balance, and then 50%. So that will be 150%, then 200 here, and 150 here, and 200 here. Okay. And I know a lot of traders use this, and I mean on the pretext of market profile, again, to each his own. But I mean, from whom I learned, the market profile was never meant to be so, how do I call it? Subjective. I mean, so mechanical. It is anything but mechanical. What you're talking is also right. What you're saying is the initial balance range, and if this is so wide, it should not extend. Or, for
Yeah,
example,
yeah,
have
because
an, I know what you're talking about, 50 plus 150 and 200 there, and then
yeah,
a
yes,
different color line here and different color line here.
yeah,
I
yeah,
understand that,
and
but
it also helps
you
you
will fail
classify the
more often
days
rather
as
than, yeah. Mhm.
classify the day basically neutral or trending day, because the initial balance is actually the key role.
Okay.
If you notice on on expiry days, this
Yeah.
on very large number of occasion, I found that the range that is set in the first 30 minutes is then is the total range for the day. If they want to keep the price within that range, the
Mhm.
initial balance will be the entire range day. So
Okay.
initial balance actually is a very key
Yeah.
point to determine how what kind of day will develop. If
Yeah.
you know it, the range is very initial balance range is very 30 or 40 points, and the total range of the day generally is 120 points. So you can easily assume that it is likely to trend into it is going to be a trend day, because the
Yeah.
initial balance is very low. And if it is a very large initial balance, then you know that the market is going to be a neutral kind of a day, and it will settle in between that range, unless there is some news or some event which happens. But most likely initial balance will tell you where in. And this is with keeping in context the opening, or where does the market opens, within the value
Mhm.
area, outside the value area, or just below the value area, or just above the
Mhm. Mhm.
value area. That
Yeah.
is the thing.
Yeah, I understand. So I will just we'll have a
Yeah,
word discussion with the admin.
yeah,
And
that will be very great.
secondly,
And
I
that
just if I
statistics
may.
will be very useful if you can
Mhm.
add that statistic into that bar statistics. Because, and also, if it is able to,
Oh,
if you are able to download it, then you can bring a lot of you can do some work in the Excel, and actually build some good understanding of the data. So if that can be done, then it will be really great. This is what my uh,
yeah.
wanted to share with you guys.
Yes. Sure. Yes, I'll request. I mean the admin to look. And secondly, if I may, what your yes, the concepts that you say, trending, non-trend day, neutral extreme day, which
Yeah,
generally people talk about. It's being talked about a lot these days in India. But by the way, James Dalton has left these terminologies. He does not
okay.
use those days at all because the market has evolved. He generally has only, like you said, initial balance plays a very important role.
Yeah,
And when you do something like neutral extreme, you're already forming a bias and you're becoming mechanical. So the idea is not to be mechanical and think
okay,
contextual. Okay. So again,
okay,
it is totally what you're saying is correct. And I mean, it finally what suits you is the best that should work. You should be confident on it.
right.
So what we can do is actually have a, like you said, this is 100%. This is an expiry day. You can have a 50% of extension and a 200% extension here in
Yeah, yeah,
certain different
yeah,
color, and it
yeah,
solves most of your queries and problems.
Yeah,
yeah.
to
And
Rafaji's point, okay, go ahead. Sorry.
Mhm.
Yeah, and this, if you can correlate it with the candlestick charts, because mostly you get an good understanding of the kind of candle pattern that has formed a day prior, and how the last 4 5 of days have been. So you can the market profile, and I mean the structure that has come out on GoCharting is very beautiful. Well, I
Mhm.
just want that extension thing and all this data to become available, and it will become very handy. Like I said, if you correlate it with the candlestick, it will be very useful. I
Mhm.
mean, not trying to find and form any bias, but it gives you a
Yeah, yeah,
hint
yes,
basically.
yeah, yeah. It keeps you objective if you want to say that
Yeah,
where I should. Yeah, I totally understand what you're saying.
yeah,
Yeah,
Yeah.
just to add on though, to Rafaji's point, the market, see, when this market profile thing was formed, from there the pace of the markets have evolved essentially. Okay, so in terms of structures, times, and everything. So I know, for example, few traders in US who are now using 30-second range essentially initially in terms of tick, and then they trade a breakout of that. Is so essentially be wary of these things as a strategy though. I mean, over a period of time, just be
mm,
wary of these things, as I said. Not that they're good or bad. Essentially, you form uh, a theory or a scenario out of that and then trade that, then it's great. Okay.
No, we have taken our notes. The GoCharting team will work on these enhancements. So what would be really, really helpful, guys, is if you can join our Discord channel, and there is a particular thread called feature request. If you can go there and just post what your requirements are, it helps us, project plan it in our future release. All right. I think we have covered actually 1 hour. We were supposed to cover 30 minutes. But I think this is a good investment in terms of the time and the effort. I would like to kind of thank everyone who has joined the call, and especially Sanu and Rafaji, who have done a brilliant job explaining these, you know, little published, little known facts about order flow. And hopefully I can get the recording today completed, and I will be posting it on YouTube and sharing the link on Twitter. And if you have any other suggestions, feedback, feel free to just comment on our Twitter, and we can take this up in our next session. So ending this here on a high note. Wish you guys a happy holidays, a wonderful year ahead. Hopefully 2021 will be much much better than 2020. And stay safe, guys. Thank you so much.
Thank you, everybody. Good Sunday.
Thank you. Thank you very much.
Yeah.
Thank you.